Hey guys, I'm Steve, and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, hit the subscribe button. Trust me, you won't regret it. And if you're a returning subscriber, welcome back. Guys, listen. This morning, they announced the CPI numbers, right? And the CPI report was worse than expected. Inflation is still rising. Now, all the numbers were off the chain, like they weren't as expected. So it lets you know that the Fed's got a lot longer to go before they see any type of dent in this type of situation with the economy. But check it out. Surprisingly, I thought the market would fall. Me and a lot of other people expected the market to fall because they was going to issue weaker guidance, for the future, and stocks were going to continue to tumble. But surprisingly, stocks took off. Earlier in the trading period, around 8:30, when I was paying attention to it, when I was out in the field working, we were down like 0.5% in some of the major indexes. I look up in about an hour or two, man, we up 1.5%. Now, even right now, like last time I checked, the Dow was like at 2.7%. S&P was like 2.4%, and I think the Nasdaq was like, that was the lowest one. It was like 2.1%. But still, looking at that, man, it's like almost 1,300 points of a swing from negative to positive. Now, the way I take this and the way I look at it is, me personally, I'm not believing the hype from just previous experience as an investor. Now, the way I look at the market right now, because they're expecting a 1%. Like, I mean, I wouldn't be surprised if we have a 1%, uptick the next time they raise these rates. Instead of 0.75%, it could be 1%. And some of the experts are talking about that. It might be more. It depends on how much pressure's on the Feds, to get this thing under control, or get like some type of wrangle on it to where it either slows down and starts going in opposite direction, or they just make a serious dent completely. Now, the market took off, and it's still going as of now, right? I'm looking at it. I mean, the numbers are going crazy in the green. Me, I'm not believing the hype. Like I said, my opinion, I think a lot of institutions are starting to put stakes in certain stocks that they want to build on for the future. Like a lot of them shed a lot of stocks at a certain price and got a profit from it. Now these same institutions are buying back in, after they avoided being shredded by that downward spiral and losing their money, and they're jumping back in. Plus, another thing, you have to watch this, because when you're watching this type of behavior in the stock market, a lot of times what it's telling you is these big companies, it tells you their next big moves. Now, we don't know directly what stocks each company is buying, but we know they're just buying in at an alarming rate. Now, every stock, every company, right, has their own set of analysts, their own set of people that make trades for them. So, barring what they heard, everybody knew the news was going to be bad, right? So, some companies are like, okay, when the stocks get to this point, we're going to buy back in. When we buy back in, we'll eliminate that loss, and then we'll buy just a few. I don't know if they deal with thousands. I know they deal with 10,000 shares, a few thousands of shares, and we'll stake our position because we know this thing is going to fall further. So today, this hysteria you're seeing in the market, I think it's a lot of companies buying back into the market, and just with a buy and hold strategy, and then they'll slowly trickle in, and get their cost bases down as these stocks continue to tumble with these interest rates that they're expecting to do. And then talking about the interest rates, guys, they're talking about we could be having rate increases all the way to September of 2023. So this madness here may continue. Another thing, financial sector took off today. I made a video yesterday talking about if you guys were seeing the numbers on these financial stocks. A lot of these financial stocks were sitting there at peak uh, numbers, and I'm like, man, why nobody hasn't brought them up? A lot of people was waiting for the CPI numbers. So luckily yesterday I brought in and grabbed me a substantial share of stocks. So today, as the market's going up, I'm going up a little bit better than I would yesterday. But I mean, I'm glad I pulled the trigger on them stocks. Guys, this is just temporary. What you're seeing on TV today. So don't get get your hopes up high and be like, oh, the market then turned around. You might see this today and partly tomorrow. Now, what's crazy about it? Now I'm sitting here, I just got home from work. I'm looking at CNBC. I wouldn't be surprised if this thing goes back and breaks even at the end or slightly turns negative, which you've seen it. It goes red in the morning, takes off, explodes green, and shoots back down to red, and everything goes back to normal. Or tomorrow afternoon, Friday, people are jumping in, jumping out of these stocks, and then we go back to normal. Because this is just news that was dropped today, and everything is all fresh and new, and a lot of people are jumping in and jumping out, and a lot of investors, novice investors on the sideline not knowing what's happening, and they think the market's going to always be like this, and they think, oh, it just took us out of the recession. Or there's some people not even keeping up with current events, and they don't even know what's going on. But just be patient. Like me, being that I heard the news and we haven't had a slow in the economy, right? I made that big purchase on my stocks yesterday. My bank stocks, I'm sitting good. I'll continue the dollar cost average. As far as my financial positions, I'm good on buying anything in the financial sector right now. As far as my new plans, being that we got like a somewhat of a timetable of how the Fed looks at the seriousness of getting this inflation down, I'm going to be putting a lot of my money into my S&P 500 ETFs. And it's just a safe play. And it'll be a viable play once the thing takes off, But I mean, as far as me dollar cost averaging, I'll be putting the majority of my money into those, into the S&P 500 and my ETF. And I'll be slowly but surely dollar cost averaging in some stocks, depending on, where I'm at in my portfolio at that time in the next coming months. What else can I say before I end this? It's going to be a bumpy ride, guys. It's going to be a real bumpy ride. A lot of people seeing this green, and a lot of people might panic. Stay your course. As an investor, stay your course. Stick with your strategy. Don't worry about what you see on TV. They have to keep talking about things to make their airtime interesting. Like I said, you can hear it, but don't listen to it. And, stick to your plan. Keep dollar cost averaging. Everything going to be okay. You get ready for the blast wave. We just seen the explosion. What you're seeing is the explosion. That's the flash. But when the blast wave comes, have your portfolio ready for you to brace for that impact. As usual, guys, there are going to be a lot of bad earnings misses. And, we ain't even had the earnings week yet. We got the holiday months coming. You're going to have to sit. It's going to give you the end of the year of what a lot of these companies have done, because this thing started a little bit early. So a lot of people are going to have time to see what these earnings calls say. We're going to have a lot of bad earnings calls. So don't get caught up in if the market is green for a couple of days because once the reality comes and you start to see shareholders and their companies are reporting misses and numbers that are way off expectation, you're going to see these stocks continue to flip, and we're going to go right back to normal. And then beyond that, today, a lot of people are following because a lot of investors are doing, they're making massive pools of stock, and it's making these numbers jump like this. And a lot of people can't differentiate when it's an investor, an institution, or a person doing it. So a lot of people get caught up in that. Today I won't buy anything. I won't buy anything at all. Probably until next week, because I mean, this is just, fireworks right now. It's just pyrotechnics. It's just, it's just something to keep you just watching. But, ready yourself. This is what everybody's been talking about. We're talking about a crash. People are talking about a crash coming and stuff like that. Just be ready. Have cash on hand. Buy your favorite stocks. and you'll be right there on time. But yeah, guys, closely watch the market, closely watch your portfolios, stick to your strategy, have cash on hand, and be smart when you buy. Buy what works for you. But that's it, guys. I just want to chime in. Bunch of smoke, a little bit of fire, but the blast wave ain't came. So hold on, it's going to be a bumpy ride. Got a lot of earnings coming up, and we're going to have a lot of disappointment, and we're going to have a lot of value falling in your lap. So make sure your lap is clean, have your hands up to catch all them great deals, and do the right thing. I'll see you guys. As always, comment, like, share, and subscribe, and I'll see you guys in the next video. Thanks.